interest rates high in the news these days with anticipated cuts in September, but there's a lot that goes into the decision on whether we're going to cut or the Fed's going to cut interest rates, and wanted to kind of show one pathway of stuff and how it has rippling effects. So interest rates are partially affected by inflation. Lower inflation typically means lower interest rates, just kind of as a general rule. Now, inflation is partly affected by the consumer price index, the CPI, as you've commonly heard. And the CPI measures the change in an average basket of goods. So an example of a basket of goods would be like groceries or food. And there's different baskets, but you have to show a change relative in a similar basket. Now, data for the CPI is collected by the BLS, Bureau of Labor Statistics. So you've probably heard them in the news because the BLS, they do a lot of things. One of the things that they do is determine the change in price of a basket of goods by actually going in person to vendors, to grocery stores, or checking online, or just physical labor that they have to go and figure out what these price changes are. Now, the BLS has been majorly affected by DOGE, Department of Government Efficiency. They've made some major cuts, which means cuts to their labor force, cuts to their resources. All of this to say that right now, with cuts to the BLS, we have less clear information and more assumptions are being made, which, to go all the way up the chain, means, yeah, we think there's going to be rate cuts in September, but we don't know. This is just one of many chains that's a little cloudy, a little bit more convoluted. And it's all kind of, it's a big mix. It's a big moray of things that the Fed is having to try to figure out right now. So just one chain of events that has rippling effects. We're hoping for rate cuts in September. Can't be certain. Watch this space.